More money for everyone. That's right, for a limited time only because we can't do this all day. Democrats are buying votes again. Let's raise the minimum wage. What? Laundering taxes? Shut up, kid. We're trying to depreciate the national debt by distracting everyone with higher wages. Play along. Our story begins with the business. It produces a product and sets a competitive price based on total cost with a small profit margin. 10% was used for the computations to follow. In simplified terms and proportions, cost is evenly divided between salary and services. The government wants you to focus solely on employee salary, but there is more to it than that. There are hidden fees imposed on the business by the government, like workers' comp and various other copays, which can reach 15% of the employee's salary. Fringe benefits are part of the salary package. These include sick leave, vacation days, retirement plans, tuition reimbursement, medical, dental, 401k matching, and so on. Some of these are either imposed or heavily taxed, regulated, or fined to generate more income for the government. This is the rough breakdown of the salary burden. The other part deals with services. Insurance might be the largest burden on any business, protecting it from accidents and frivolous lawsuits. Equipment to build the product and run the office, materials to feed the equipment, and a variety of power bills rounded out. This illustrates the supplier dependency of the business. Keeping costs down means keeping this network as flat as possible, because each supplier will impose a profit margin on their product. Part manufacturers are dependent on component manufacturers, on down to raw material providers, with layers of shipping and storage in between. Any government-mandated increase in wages will have a snowballing effect on the price of the final product. The government's goal is increasing taxes in each category. Forcing higher wages generates higher consumer prices, business cost, and income tax, along with all the government agency charges buried in the salary burden. President Clinton employed a new approach for generating more government income. He attacked manufacturers with an inventory tax. The impact sent a financial shockwave to the end business, forcing suppliers to dump stock and manufacture by order instead of in bulk. Skyrocketing prices and many closures were the result. The most annoying service for any business is the legal department, not for defending against accidents and lawsuits related to the business and product, but for having to dig through the volumes of government regulations with more raining down every day. And these regulations do not help the people. They are designed to generate more government income through fees and penalties without calling them taxes. Big business can afford to make hefty campaign contributions and avoid some of this burden through the Domestic International Sales Corporation, commonly known as the middleman. Details about this program are provided in the Laundering Debt and Laundering Trade videos, available at ostrichize.com. The big beneficiaries of the program are the unions. They also represent another salary burden on the unionized business. The unions give heavily to the government through both financial contributions and physical presence in media-driven campaign marches for even bigger government. The government creates the problems, and then rakes in the profits like a farmer harvesting crops. The current movement is to raise minimum wage. As a baseline, consider a product costing $120 coupled with a 10% margin yielding a final $133 price, with some round-off. Cost is typically divided evenly between salary and service. Employee benefits and hidden government charges take their share before the employee receives their paycheck. However, this example does not include any income taxes or withholdings. Only a 5% sales tax is used for local perspective. Now, double minimum wage. As expected, all salary components double, and this is where the government and media outlets want you to stop. But look what happens to the services component. The observed snowballing effect is based on a very shallow dependency depth of just 3, from materials, component, and part to final product with all shipping and storage layers ignored. This is rock bottom, with an exponentially increasing burden considering a growing dependency depth and volume. The final price is shown, plus a separate sales tax listing. This illuminates another topic the government and media outlets don't want you discussing, the value of the dollar. This is inflation, which means your doubled, unreported gross income has less value. Mandating the doubling of wages has reduced your buying power by 35%. You have more dollars, but they buy less. Think of them as depreciating stock certificates. Now consider the reverse. Reduce minimum wage by a factor of 2. Salary elements drop by the same factor, which generates media discussion riots and screaming to prevent you from seeing the rest. The snowballing effect works in reverse. Look at the collapse in dependency cost. The final price and sales tax are greatly reduced, yielding a 21% increase in buying power. Even though you have far fewer dollars, you can buy more stuff. This is the clear result of increasing and decreasing wages by the same factor of 2. The result in buying power is increased with a decrease in wages. But this is not good for big government. Increasing wages is the laundering candy to allow government to raise 250% more taxes in the charges and process. Again, not including income tax, which is the final Democrat joke on the supporters of a higher minimum wage. Receiving more dollars pushes them into a higher tax bracket. Any Democrats warning the people about this? They always want higher taxes and are finding increasingly complex and interesting ways to rename and hide them. If they came out and said our plan lowers personal income deductions and increases tax rates, the people would revolt. It's kind of like changing full-time employment from 40 hours to 30 hours and hiding it in an unrelated health care plan. The result is reduced unemployment numbers by simply changing the equation. ObamaCare reduces wages by 25% with none of the reduced pricing benefits. These are the laundering conduits, candies, and villains, to avoid raising those revenue enhancers. Factoring unions into the salary equation just makes things twice as bad. It adds another government entity to the equation. The added business salary burden is roughly equal to 75% of the employee's salary, plus the unions receive employee dues. The example does not show the full impact. The buying power of the union worker is reduced 61%. No wonder they are always angry and protesting their self-induced condition. Companies would be better off giving their employees a 9% raise across the board to leave the unions. Along with dues, workers receive 10% more income, and the company saves nearly 25% on its salary burden, making the company more competitive with a more affordable product. That would save the auto industry. Dropping regulations and leaving wages static would lower prices and have a larger effect on increasing consumer buying power. It would stimulate business and generate higher tax income, lower unemployment, and better employee benefits. That would save Detroit. Ending the war on manufacturers and lowering fuel costs would decrease product cost, generating more startups, increase competition between business, resulting in lower prices. That would save America. Increasing taxes is political suicide, but it can be done with the support and continued defense of the people through lies and deception, by laundering the larger tax policy through something the people want, but don't fully understand.